Indian telecom operators have been taking baby steps towards protecting their margins by focusing on the high-value 4G consumers. While that's worked to a certain extent for Airtel, it's not for Vodafone Idea, which saw its revenues drop the quarter gone by. The government's now hoping to mop up a hefty sum from the 5G spectrum auctions, but it looks unlikely as 4G rollout remains patchy. So, do telecom operators find themselves in a catch-22 where they rather improve their existing services or jump into a newer technology? Joining us right now to talk about this is Rajiv Sharma, co-head of research at SBICap Securities. Rajiv, thanks very much for taking out the time. First off, the basics and, the performance of most of these telecom majors this quarter. The big disappointment obviously came in from Vodafone Idea, which saw the stock take a plunge. Aside from that, Jio's ARPU continues to remain weak and on a quarter-on-quarter basis continues to slide lower. What have you made out of the performance this quarter so far?
Yeah, hi Devina, hi Neeraj. It's always good to be chatting with you guys. In terms of performance, what we clearly see is, Bharti is coming out of that pattern of degrowth in India wireless revenues. So we clearly see, Bharti revenue growth going better, and they have, it's 2 quarters now. They've gone into the positive territory. This quarter, if you see, Vodafone Idea revenue decline was 505 crores, whereas Bharti gained 200 odd crores in the India wireless revenues. So, and that's based on the ARPU improvement. That's one. The second point is Vodafone Idea continue to lose subscribers. Bharti is also lost, but very lesser when you do the comparison with Vodafone Idea. Yes, your comment is right that Jio also seen a QoQ ARPU decline, but the ARPU of Bharti and Jio are not comparable because of the IUC reporting. But yeah, I would still say that Bharti will be marginally better on ARPU versus Jio. So the clear trend is that two guys are growing, positively on the India wireless side, despite the different trends seen in ARPU. One is gaining on subs, one is trying to improve ARPUs. But then the third guy that's losing subs, and the ARPU impact is more of a denominator impact because subscribers are coming down. You yet to see any meaningful improvement on back of the minimum recharge plans or other things.
Rajiv, I remember reading an international brokerage report which suggested that FY20 would be the turnaround year in terms of growth for most of these telecom players. That really doesn't seem to have happened, and we're not even seeing early signs of that taking place. I mean, what needs to really materially change for things to pick up on ground for most of these telecom majors?
See, if you look at the, some of the initiatives which Bharti has taken, like the Airtel Thanks, it's a very interesting, idea which they have come up with. They are trying to segment the subscribers on basis of silver, gold, platinum. They don't aspire to be a platform of content like Netflix, which a Jio does. They don't have any aspirations for e-commerce or to be an Amazon, which a Jio does. So they're taking advantage of the situation, and they're coming up with this Airtel Thanks. It's not meaningfully driving things, but I believe maybe another couple of quarters, Bharti management said that they are trying to do something more with it. It could meaningfully change things in the coming days. Possibly, yes, it could move ARPU without much dependency on the tariff hike. But I would say that, this quarter, telcos are witnessing seasonality. Then you have the IUC impact in the 4th quarter. You'll not see ARPUs really surprising you this fiscal, though this quarter there was some surprise coming for Bharti. So price hike is what will change views of everyone, and the market is consolidating. We are moving towards that. It's always difficult to time, but it looks unlikely that it's happening anytime soon. Maybe when you are close to 5G auctions, when you are, when that pressure on telcos is much more, then, post 5G auctions, or if the market consolidates from 3 to 2 meaningfully, then you will see the structural pricing increase coming in. But we're still not there.
Are you predicting that that will happen, the 3 to 2? Because Vodafone is clearly under a lot of stress and the stock price is showing that. Rajiv, what's your verdict on the company? What's your verdict on the stock as well?
So we maintain a negative on the name. We see further downside in the share price, and our view is that market is still not pricing the subscriber decline which may happen. As per our analysis, they will lose another 50 to 60 million subscribers. Look at their 4G strategy. They're trying to focus more on the top districts. In our view, it's more about 10, 12 markets, circles, which are giving them 70, 75% of revenues. So the rest markets, which account for 35% of your subscribers, they are vulnerable. So we believe there's subscriber market share loss in these markets would continue. And that's why that 70, 60 million number comes in. And when you have a very focused kind of strategy and not a pan-India strategy, then there will be a situation where they may think of shutting down a couple of circles. They would become regional. So things like this would play on. They may stay there for long, but it won't have a meaningful effect on the market presence. So that situation, we could be 4-5 quarters away if they are not accelerating their 4G integration and rollout, at least in the top 12-15 markets, and pumping in more money. And another trend you see this this quarter, and now the big picture is that the market is acknowledging integrated play. Jio is trying to get its FTTH. It's perceived integrated, though it's pure mobile. But look at Bharti, the enterprise, the DTH, the home broadband. They're all helping this quarter, and incrementally that's going to be the bigger story. The FTTH from Jio and Bharti's integrated play. Vodafone is got the U broadband, they've got enterprise, but they have to focus everything on mobile.
Right. Rajiv, just come in with regards to, the tariffs that we've seen, decadal lows. Do you see that picking up anytime soon? I mean, even if you take a look at what CRISIL had to say a few months ago, they spoke about ARPUs actually picking up by 11% in FY20, revenues for the entire industry to grow by about 7% odd. Is that realistic? Is that a realistic assumption?
See, even in our model, Bharti's ARPU are up 10%, but we've already seen a large part of it. Next quarter, it's going to be a sequential decline. 3Q, you may see some pickup, but then that will be offset by in 4Q because of the termination thing. So that 10% is not going to meaningfully lead to a more than 5% kind of revenue growth. And because remember, the previous fiscal, the base was very low. So these percentages are not going to matter much. We will see this once the consolidation is evident, and second, when we have the imminent pressure on investing in 5G, which in our view, we discussed last time, it could be 4 to 5 quarters away. The sector will, at least the two large players, they will continue to see positive revenue growth, but Vodafone will be under pressure. That means sector overall growth maybe 2-3% at the best this fiscal.
Okay, let's talk about your favorites now within the listed space. While we've seen a very, very steep correction for Vodafone Idea, what does one do now? And Jio, obviously, you play via Reliance Industries, but that leaves you with only Bharti Airtel. So is that something that you would make fresh investments into?
So we have a modest 10% upside in Bharti. We have a 15%, we expect a 15% downside in case of Vodafone Idea, and some more downside in case of Infratel. We're negative there as well because the Vodafone pressure somewhat starts reflecting in Infratel as well. So as of now, we are positive on Bharti with limited upside, but not very optimistic. We await more clarity as to how the market plays out. Sometimes what we've seen in other markets is when a big operator is losing market share, it may look at doing some kind of tactical pricing discounts just to get back subscribers. For example, the 45 rupees plan is a focus of Vodafone Idea this quarter. It's not any kind of pricing discount as of now, but somehow hints that they may rethink or revisit the minimum recharge strategy if they continue to lose subscribers. So those kind of things suggest that there could be some volatility in prices before they go up. And that's why we're seeing a limited upside as of now.
We'll leave it at that, Rajiv. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. So don't look at Vodafone and maybe Bharti limited upsides. By the way, just a couple of stocks that I want to mark before we move on to the next discussion. SRF has gained 11% in reaction to what seemed to be an inline set of quarters. So some positives that the street must be seeing. And Interglobe Aviation, we spoke about it just a while back, and the news flow that has come out, that stock has taken a plunge now. Intraday was down about 5%, nearly 5%, currently down about 3.5% as well. So watch out for a couple of those names in this session. Now, on to the other important conversation, and that's metals. Now, own set of woes, which are not completely of their own doing. Sector's been bearing the brunt of trade wars, seen prices fall as investors assess demand. Will cooling raw material prices prove to be a balm? And that's the question, really. But frankly, the larger picture is, because of the trade war, what could happen to global commodity demand and thereby prices? To talk about all of that, Paul Bartholomew of S&P Global Platts joins us right now on the phone line from Singapore. Also joining us is Amit Dixit from Edelweiss Securities. Gentlemen, both of you, good morning. Thanks for joining in. Paul, if I can just start off with you. The trade war has taken a turn, an ugly turn, with in the last 24 hours. Do you think that may actually have a further bearing on the global commodity demand and prices as well?
Hi. Yes, I think it will. There's no doubt that the trade tensions between the US and China, are having quite a detrimental effect on metals demand. Not just on key markets like China, but in other parts of the world, and it's particularly hitting the manufacturing sector. We've seen we've seen auto production pretty much sort of falling in many countries. It's still going backwards in China. And really the big problem is at the moment people don't have the confidence to invest. So some of the countries in Asia that are very trade dependent, we're seeing investment in manufacturing at 7-year lows. And the talk in the last couple of days between the US and China just compounds this reason. So we're seeing so many metals that are related to manufacturing kind of sort of falling. Even the iron ore price has now gone back under $100 a ton, although that's probably due to some talk about the yuan devaluation. But it is definitely having a dampening impact on metals markets in the second half.
And you reckon that until these tensions show a sign of reversal, that could be further weakening of the prices as well? The reason I ask this is because prices have corrected in anticipation of a slower demand and the uncertainty around world trade. Do you think in your own wisdom that can have a further bearing?
I think it could, because it's been sort of dragging on so long. I mean, initially, when the Trump administration introduced, import tariffs on some metal like steel and aluminum, which really precipitated, the start of this trade conflict. The market in China, it sort of reacted for a few days, but then it returned to fundamentals. What's happened really is that these trade tensions have kind of hit the market, particularly in China, at a time when the government in Beijing has been trying to sort of been trying to sort of pull out, some of the toxic assets in the economy. And that's why we saw a big slowdown in Q4 last year, which has sort of persisted into this year. So, the Chinese Politburo met last week, and they've said that they're going to try and support manufacturing. So you might see a bit of a recovery in manufacturing in China, but if you look at the official the purchasing managing indices in different countries, in the US, in Germany, in many countries in China, they're all in contraction. So I think that's the part of the market that's really being hit hard, in particular. Other parts of the market, property, construction, maybe can be supported, but I think it could actually definitely get worse before it gets better.
Okay. Amit Dixit of Edelweiss is also with us. Paul, just stay on because Amit would have some very good insights into what's happening within the Indian landscape as well. Amit, you just heard Paul's view. You would have your own view too. How are you viewing all that's happening and the impact that it could have on some of the Indian companies? Because frankly, when I talk to almost any investor, they believe that the pain is in the price, but the stocks continue to correct.
Yeah, sure. In Indian context, if you look, the spreads across the steel space have corrected very sharply. In fact, HRC prices in the country have been going down if you take into account this week's correction as well, they have gone down for the 8th straight week, and they are down almost to the extent of 8% in last 45 days or so. So therefore, the spreads are really compressed. And if you look at Indian iron ore prices, I would say they are quite stagnant. Unlike global prices, which have seen easing off quite lately, Indian iron ore prices in comparison have remained quite, I would say, stagnant. So therefore, spreads for domestic producers have gone down. As far as non-ferrous is concerned, well, we all know the direct impact it has of the trade tension. So therefore, zinc at 11 months low and aluminium also, wavering around $1,700 to $1,800 a ton. I really don't see a lot of respite in this unless and until something material happens on trade side.
That seems to be the center stage, and I think Paul's view is that as well, that the demand as well as the pricing might be under a bit of pressure. Amit, what do you do in such a scenario for some of the companies? And then I would want Paul's view on what happens if indeed this tends to unravel. But first, looking at things that we have at hand and data at hand, Amit, what would your verdict be for some of the stocks? Because they've corrected quite viciously in the recent past.
Yeah, absolutely. You're right that they have corrected quite a bit. But if you look at consensus earnings, for example, they have not been brought down for many of these stocks. There are still pickings in the space. For example, Coal India appears to be good defensive bet with domestic demand in place, with the e-auction premium and of course FSA realizations going stable. So that is one stock that I like. The second one is of course Jindal Steel and Power, that stands out because of operating leverage angle. So in times like this when price doesn't support you, I believe one should go for the stocks where volume uptick is there. So these two stocks fit the bill quite nicely. Another mining stock, NMDC, also appears to be good because of the fact that the iron ore scenario in the country is quite favorable for NMDC. Some of it is not really reflected in the stock price because when correction happens, everything goes down. But there are places where you can actually park your money.
Okay, and people would be hoping for that. Paul, I'm not asking you for a stock recommendation or anything out here, but my question to you is that do you think asset prices and therefore companies which deal in those assets could recover quickly if indeed this shows signs of unraveling? Part two of my question would be because you would be looking at the companies and the balance sheets across the world. Does the stress on the balance sheet show any signs of immediate improvement if indeed there's a reconciliatory note being struck between US and China, as difficult as it seems right now?
Yeah, it depends, I guess, which companies you're looking at. Obviously, some of the big companies that have been exporting, iron ore have been doing very, have obviously been doing very well because of the very high prices, probably since the sort of beginning of this year. But I think generally speaking, the major mining companies have spent the last 2 or 3 years really getting themselves in a very good position, with very strong balance sheets. They haven't been investing in assets like they were in the past. They've been focusing on giving back more money to the shareholders. So I think, the Australian companies, a lot of them like BHP, they're going to be reporting in the next few days, the next week or so. So we'll hear how they're seeing things. But I think generally they've got themselves played a very straight back, kept themselves in a very strong position to probably withstand So some of the tension that we're seeing, but there's no doubt about it that they will comment on on some weakness in the market because of the tensions between China and the US. I'm sure they'll be flagging some kind of at least warning for the strength of demand for their commodities in the next half year or so.
Okay, Paul, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. We're running out of time completely, but Amit, because you gave me that leeway, just want to ask you, you mentioned that there are some companies or some assets in which you can park your money in when it comes to the Indian context. What's the pecking order currently?
No, so we have a preference for ferrous over non-ferrous. That has been our preference. So I would like to say JSPL is one of the companies. Then Hindalco is another one, and of course Coal India. So these are the three companies that I would like to stake my bets on.
Okay, would have loved to chat more, but out of time completely. In fact, overtime on this show. Amit Dixit, thanks so much for taking the time out and speaking to us today at Bloomberg Quint as well. And on that note, we have to wrap it up on this leg of Indian Open. The markets are doing well. The FNO show will take forward all of that action on the other side. From Devina and me and the team that put this show together. Thanks so much for watching.